Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha Darad. And first of all, to all the viewers from the Delhi studios, wishing you all a very happy Holi. And yes, it's the color of red once again for the markets. Another day of sharp correction for us. But yes, we're seeing a bit of a recovery from the day's low level, particularly for the Nifty 50 index, which did open below that 24,400 mark level. And that was the first time in nearly 7 months that the Nifty had broken below those levels as well. So yes, right now the Nifty has seen a recovery of about 200 points from the day's low level. If you look at the Nifty 50 index, it's above that 24,450 odd levels. Sensex too has rebounded nearly 600 points from the day's low. But yes, we have seen that in the past 3 days, Sensex has plummeted by about 3,000 points. So now we'll watch out whether or not there is more sell-off left from the current levels from the index level perspective, or there is a deeper correction ahead on the back of the West Asia tensions. But yes, all the developments that's coming in from the West Asia, if you look at the recent reports that indicate that the White House is expected to meet defense contractors in the US to discuss speeding up of weapon manufacturing, given how the tensions have been unfolding in the Middle East. But yes, stocks across the globe, they have been rattling. If you look at Dubai Exchange, that resumed trading today after being shut for 2 days. And Dubai Financial Market General Index dropped by about 5% at open. ADX benchmark also fell by about 2% at open. So yes, the Dubai Stock Exchange is definitely feeling the heat at the current levels. But yes, there's a bit of a reprieve that came in from the European markets, because this afternoon they have opened largely higher this afternoon. So yes, it's a mixed reaction coming in from the global end of the markets, because yesterday also we did see that the US markets had recovered from the day's low level after President Donald Trump had reassured that he would be extending coverage, insurance coverage, to all the ship tankers which will be passing through the Strait of Hormuz. Whether or not that really materializes is something that we'll be watching out for. But for now, the Strait of Hormuz remains closed, and of course we'll be watching out whether or not the freight costs and of course how the crude oil prices react on the back of the Hormuz closure. But yes, coming back to our own markets, volatility continues to rise. India VIX is up by about 23%. And yes, that definitely speaks of the risk of sentiment, which is, sweeping off the markets as of now. But yes, barring the Nifty IT index, which is showing marginally in the green, all the sectoral indices have been battered in the red. If you look at Nifty Metal Index, down by about 4%. Nifty PSU Bank also down by about 3% itself. Nifty Realty Index also feeling the heat with about 3% decline. Bank Nifty Index also seeing a decline of about nearly 2% itself. But yes, let's take a look at how the gainers and losers pan out at the current levels. If you see the Nifty 50 index, about 46 stocks have been declining versus 4 stocks which have advanced. So yes, it's a very skewed market picture in terms of what is supporting the market from the declines as of now. But yes, from the laggards front, you can see Tata Steel has been leading the losses. One of the top, it's like I was talking about how the metal index has been seeing a sharp sell-off across in today's market. So of course Tata Steel with about 6% decline coming in. SBI Life also seeing a decline of about 5%. LNG once again, it's given that the order book of L&T's international order book has a significant Middle East exposure. That's why we have seen that in the past 2 days, the stock itself has declined by about 10%. So yes, L&T once again with about 4.5% downtick. JSW Steel, another metal counter, seeing a sharp cut of about 4%. Shriram Finance, Grasim, Bajaj Finance, some of the other losers on the Nifty 50. But yes, what is doing well in this market is your Coal India on the back of its mixed February production report, and of course and the fact that now that the crude oil prices have been rising, so we are seeing some alternative fuel resources which has been gaining traction. So yes, Coal India doing well on the back of that, 2% gains coming in for there. Bharti Airtel also seeing a gain of about 1.5%. Infosys, Tech Mahindra, some of the other gainers on the Nifty 50. But yes, just to understand how the last minutes of the trade looks like, and of course how you should be positioned, I'll quickly go across to my technical expert of the show. Joining me is Osho Krishan of Angel One. Osho, good afternoon. Wishing you a very happy Holi first of all. But yes, you can see the markets have been red throughout this week, and Nifty continues to remain under pressure. So, I mean, do you think that we are already in an oversold territory, or is there plenty of bad news which is yet to be digested by the markets?
Firstly, wish you and the whole production team and the viewers of Money Control a very happy Holi. Well, now looking at the markets, the color is definitely red, and we are not liking it on the uh, on the Dalal Street. But overall, there has been a strong macroeconomic factors, geopolitical concerns, because of which the market has been into a very strong sell-off zone. But overall, technical and fundamental, if I have to quote, then market has already been into oversold terrain. There has been a strong sell-off in last two trading sessions, so I'm not expecting that from here onwards the sell-off should continue. But again, the rationale for the correction is geopolitical tension. So till the time it does not subsides on the global front, we might see further correction on the lower end. But overall, looking at the technical parameters and the zones, I expect 24,400 to 24,150, which has been a very strong support levels. The bullish gap is still intact in this zone. The bullish gap has been made in the month of May 2025. Again, it was retested in August 2025. So again, the index is testing the same levels in present day. So I'm expecting that this zone has a very strong historical support levels. So if everything subsides on the global front, then we can see a decent recovery, but that will be very early to say at present levels. But if there will be any further corrections below 24,150, then we might witness another disruptions on the technical chart. But for now, I expect that the oversold parameter should subside and stability should come into the Indian equity market. So not very much pessimistic at current levels, but will stay away or avoid the markets for the time being till we see some kind of stability coming in short-term perspective.
Got it, got it. But Osho, you're expecting that the stability would return, but India WIX, that continues to showcase that there is a certain level of market anxiety. At this time, what would you suggest investors to do in terms of their investing strategy when they're looking for markets from a near-term angle?
See, overall, India VIX has surged approximately 55% in last two trading sessions. So that is a very strong surge in the fear index. So that simply tells that market is at a very strong sell-off zone. But looking at the recent developments and the kind of support zone the market is into, currently it will be advisable to start accumulating because historically, once we witness the historical trends, then these are the conditions where one should try to accumulate or buy to make maintain buy positions at current zones. So I expect that these points or these scenarios provide good opportunity to accumulate, but in a staggered manner because we don't know by what time the war will end. So one should definitely start accumulating, but in a staggered manner, not at a very full-fledged manner, but let's say 20% every day one should start accumulating in the market. And while these things subsides, we can see a very strong recovery coming in the Indian equity market. So stay bullish, wait for some kind of stability, and then we can definitely see a strong pullback in our markets.
Okay, got it. We can see a little bit of a pullback from the current levels. So yes, that is something that we'll be watching out in the upcoming sessions. But yes, the biggest casualty in the past couple of sessions has been the OMC stocks. If you look at BPCL, HPCL, Indian Oil, all of them are seeing once again cuts of about 4 to 5% in today's trading session. And of course, this is coming as the Brent crude prices stay above that $80 per barrel mark as of now. Osho, I mean, do you think that the fall can be contained from here on, or how much can we anticipate in the near term?
In the short term, I expect that individual counters can perform in a different manner, but basically the OMC's market or the marketing companies have seen some kind of correction in the last three trading section. And still looking at the technical developments, I still expect that there might be further correction that might be due in these counters. So for HPCL, the support seems to be around the zone of 380, 390 odd levels. So it might test 380 in the coming one to two trading sessions. But from those levels, one should start accumulating the counter because it is a very strong support levels for HPCL. And similarly for BPCL, we have seen a kind of a decent correction in recent period. But overall, the counter is having a very strong support near the zone of 340. So any further correction of 15 to 20 odd points can provide a decent opportunity to accumulate these counters from short to medium term point of view.
Okay, all right. That's the word 15 to 20 points correction, and we can see a favorable point from where we can accumulate. All right, that's the key takeaway. But yes, let's move on and talk about the Nifty Metal Index because that's seeing a sharp breakdown today, 4% downtick, and that's coming on the back of the dollar firming up, and of course we are seeing a bit of a global disruption in terms of metal supplies also, which is what is keeping up the metal correction. But yes, coming to you, Osho, for the likes of Hindustan Zinc, JSW Steel, Tata Steel also, both the ferrous and non-ferrous, both of them seeing a sharp sell-off today. What's your takeaway from the metal basket?
See, overall, there has been a strong outperformance in the whole metal space, but the recent correction from some of the counters like Zinc has been into a kind of a profit booking zone from the levels of nearly 650, 670 odd levels. And from there onwards, it has been into consolidation zone. So I expect that these counters might see some kind of correction in the short term period because they have already seen a very strong stellar rally. But looking at the recent development, these kind of corrections should be treated healthy because there has been a very strong vertical movement. So after those vertical movements, some kind of retracement should be seen in the counters. So any 50% or 61.8% kind of retracement should be seen in a healthy manner and should provide ample opportunity to accumulate. For Henzing, I expect the zone of nearly 540 to be seen as accumulating zone. So if there will be any kind of correction towards 540 odd levels, one should try to accumulate positions in Henzing. Similar with Tata Steel also, I am expecting with today the counter have seen a drastic plunge of nearly 7.5%. But overall, it has been into a healthy movement, and these kind of corrections should be again treated in a healthy manner. So any dip towards the zone of 180, 185 should be seen as buying opportunity, and one should definitely try to accumulate further position in these kind of dips.
Okay, got it. That's the view for metal basket. Of course, we're seeing a sharp breakdown given the kind of rally the metal basket has seen. But yes, IT stocks is seeing a bit of reprieve today. If you look at Infosys, Tech Mahindra, they've done well, compared to how the market has been performing overall. Osho, what's your take? Of course, we're seeing rupee also at a record low today. So going ahead, given that we've seen that February has already been one of the worst months for the IT sector, do you believe that the worst has already been baked into the price?
Overall, yes, I expect so, but I there has been many reasons behind it. But overall, I expect that with the kind of breakdown in majority of the IT names, both from large cap and mid cap names have seen drastic plunge, and these kind of sell-off has triggered the oversold parameters. So I expect that these levels are expected to provide very strong cushioning to the counter. One should definitely try to accumulate at current levels because we don't know in the future when these kind of prices will be again seen in IT counters. So I expect that from here onwards, some pullback or some relief rally can be seen in these counters. So one should definitely try to accumulate. Even in some of the space, like Infosys, have seen a kind of a positive divergence, or there has been a positive crossover also from the oversold terrain. So these are the early signs where we can expect a kind of a pullback movement in these counters. So for IT, I'm having a bullish view. One should definitely try to accumulate in a staggered manner, not in a very aggressive approach at current levels, given the scenarios. So one should definitely try to accumulate IT counters at present levels. And in the coming future, we can definitely see a decent breather or rally in these whole IT space.
Okay, all right. So some signs of reversal can be expected in the tech stocks going ahead. All right, let's move on and talk about some of the individual movers then. We'll talk about Petronet LNG. The stock is seeing a sharp breakdown today, 9% fall. And of course, in the past 2 days, the stock has already seen about, nearly 12 to 13% fall itself. Now, what the company has particularly informed is that the vessels are currently unable to safely transit through the Strait of Hormuz to reach the leading airport of Qatar LNG in the light of the ongoing war in the Middle East. Osho, what do you make of the fall today? Not just Petronet, we have seen city gas distributors also coming under the sharp sell-off. Mahanagar Gas also seeing quite a bit of a decline.
Particularly in Petronet, there has been a decent movement in the recent period. The counter have seen decent movement from the strong support of nearly 265 towards 300, 320 odd levels, where the resistance was already there. So I expect the zone of 265 to 320 still persist in the counter. In future, even if the counter comes towards the zone of 260, 65, one can look for buying opportunity. While on the higher end, now the resistance is now has broken down. So I expect the zone of 295 to 300 to be seen as the immediate hurdle followed by 320. But dips towards 265 should be augured well for the buyers, and one can look for buying opportunity on the dips.
All right, that's the view for Petronet LNG. Of course, the stock is seeing a sharp sell-off today, 9.5% decline coming in for the counter. But yes, let's talk about the sugar stocks because they have been rallying quite sweetly today despite the market sell-off. If we pull up the charts of Balrampur Chini, that stock is also gaining well today. Dhampur Sugar has also been doing well, given that the global sugar prices have been rising on the back of rising crude oil prices. Now, what analysts believe is that an increase in the oil prices is likely to support further transition into ethanol, and that could result in major sugar producing countries such as Brazil, which can shift towards more ethanol production. But yes, that's what has kept all the sugar sector quite buoyant today. But Osho, what's your take from a technical angle? What are we finding attractive on the charts?
There's some kind of traction, positive traction in majority of the counters. So for Balrampur Chini, there has been a strong surge with on the back of volume. So I expect the momentum should be continued for very short-term perspective. So for Balrampur, I'm expecting a range of nearly 530, 540 to be seen in immediate perspective. Dhampur is also looking positive to me. Near about 145 to 50 should be the short-term target that one can expect. And looking at the recent developments in terms of price and volumes, there might be possibility of further follow-up buying emergence in these counters.
All right, that's the word for sugar stocks. But yes, let's take a look at the last rates which is coming on your screen. Nifty 50 index ending the day lower for the third consecutive day with about 300 points downtick, 1.5% gains downtick coming in for the benchmark index. And in the past three sessions, we have seen that Nifty 50 index has already shed about nearly 800 to 900 points itself. Sensex also seeing a cut of about 1%, 1100 points downtick coming in for the benchmark index as well. Broad end of the markets have also ended the day lower with about 2% cut, and Bank Nifty index has definitely ended the day with about 1.5% cut as well. So of course the geopolitical risks have kept the India VIX quite elevated. If you look at India VIX, it's up by about 22%, and like Osho was also talking about, that the risk is something that is getting absorbed by the markets, and that's what is keeping investors quite wary at the current juncture. But yes, barring the Nifty IT index, which has managed to end the day, marginally in the green with slim gains, all the sectoral indices have bled in the red. If you name it, Nifty Realty Index, it's down by about 3.5%. Nifty FMCG also 1.5% decline coming in for there. Metal basket, of course, one of the top sectoral laggards of today on the back of firmer dollar, where the US dollar index has edged up to 99 levels, and that is what has kept metal basket quite weak in today's trading session. So yes, 4% decline coming in for the metal index. But yes, apart from that, if you look at the mid caps and small caps, both of them have been losing in the trade. But yes, what is not done well on the small caps front is your Mahanagar Gas, 9.5% decline coming in. Like I was talking about, how the LNG stocks, and of course, they have been seeing a sharp sell-off in the past couple of sessions, given that natural gas prices have also been rising both in Europe and even the US markets, which is what has kept the gas stocks quite on the negative front. But yes, Endurance Technologies, Rail Vikas Nigam, all of them, NMDC, IGL, they are some of the other losers on the Nifty mid-cap index as of now. And even from the small caps front, we can see Force Motors, Man Industries, that is seeing a decline of about 8%. Mahanagar Gas with about 9.5% decline coming in. So yes, all in all, it's a very negative set for the markets as of now. But yes, let's talk about some of the defense stocks in focus. We'll talk about Paris Defense. That stock has done well today, given that it signed an MOU with South Korea-based Green Optics, which specializes in the design and manufacturing of optics and optical systems for defense and other applications. So yes, today the stock has ended well in the green, 7.5% gains coming in. And of course, so far this month, the stock is already up by about 12%. Osho, what are you making of this breakout? And of course, the buying interest that the stock has been receiving?
Yes, Paras has gained decent grounds in the last two trading sessions, approximately more than 13% of gains we have seen in last 2 days. But overall, I expect the momentum should be there. But on the higher end, 765 to 770 is the next potential target for a very immediate term perspective. because it is having a very strong resistance around 765. So until it breaches the zone of 765 on a decisive manner, one should be having a kind of a cautious view with their positions in Paris defense. No doubt there has been a strong consolidation in the counter, and last 2 days has been positive also. But I expect that there is a kind of a range bound movement for the counter, 670 on the lower end and 760-65 on the higher end is the immediate range. One should try to buy the dips and try to lighten up positions on the highs of 765.
Okay, all right. That's the word from you, Osho. But just one last question before we let you go. Let us know what your top picks are in this market sell-off.
There are two counters which are looking very positive to me. First one is ICICI Bank. Again, because the counter have seen a very strong recovery in today's trading session with a very strong bullish candle formation. So I expect that from here onwards, the downside for ICICI is now has been stated on the technical front, but I expect that any kind of plunge, any kind of dip should be agreeing well. So 1360 will be the advisable accumulation zone for ICICI Bank. 1340, 1335 should be the stop loss. And on the higher end, 1400 is the potential target that one can expect in this counter. The second counter is Infosys. Infosys is looking very positive to me. There has been a kind of a positive crossover, so I expect that in the coming days there might be a pullback rally that can be seen in this counter. It has currently closed around 1306 odd level, so one can try to accumulate around 1300. 1270 should be the stop loss that one should keep in this counter, and 1360 followed by 1380 is the target for Infosys from short term point of view.
Okay, all right. Those are the picks from your end. But with that, we have to let you go. Osho, thank you so much for your time and joining us.
Thank you so much.
All right, before we get to our next guest of the show, let's quickly listen into a bite from an earlier conversation today by Suhail Bhatt, who is the director at Crystal Intelligence, who shared his take on what the crude prices above $80 per barrel mean for the markets and what the trajectory looks like in terms of levels of the crude prices as the West Asia tensions unfold. Listen in.
I think there are two prominent risks that we see from India's import point of view. Both for crude oil and the gas put together, they form almost 30% of energy mix for India, and hence the entire development that we have seen for the last few days are concerning. There are two impacts. One, the immediate one, which we've already seen is on the pricing side. The crude has already gone above $80, and obviously with some assurance coming in from US, the moderation is seen, but it has not gone to a significant lower level. And at least we see for the next few weeks, till situation continues to be like the way we have seen for the last few days, it's likely to remain at an elevated level of $80 plus. If things do not escalate further and things settle down in our base scenario in a shorter period of time, I think then we should look at a moderation, and that's where the normal demand supply dynamics for the industry should come in. Our view right now with the base scenario of not escalation of the current conflict beyond a point puts the calendar year 2026 forecast for crude in the range of $65 to $70. But obviously there is a significant upside risk to this, and the numbers could get elevated if there is a prolonged conflict that continues for a longer time. So that's one, which is on the pricing side, and that's already seen on the spot market. In addition to the barrel quote, I think like you and Prabal rightly mentioned, there are two incremental costs that comes in terms of input realization. The first is the freight cost, and the second is the insurance premium. While there is an assurance given by US recently, but I think the market may not have factored in fully, and we need to see how all of that translates into realization terms.
All right, that was Suhail for us. But yes, to make sense of how the markets have been reacting and to talk more about it and of course the way ahead, let's quickly get connected with Kranthi Bathini, who's joining us from equity strategist at WealthMills Securities. Kranthi, good afternoon. Wishing you a very happy Holi from Delhi studios. But you know, staying with what earlier Suhail was indicating is that now the street has been watching how long will the crude oil prices hover above that $80 per barrel, because the longer the higher levels are, more the pain for India's macro picture. I mean, today we have also seen rupee hitting a new all-time low. So for you, what does this war mean from an Indian economic point of view, and what should we watch out?
Lovisha, good evening to you. Yeah, as if the crude oil is going to be at an elevated level for a longer period of time, for a prolonged period of time, definitely it's going to have implications on Indian economy on a negative way. But it is premature to say, because today is the fifth day of the war that has started, and we are not sure how many days it's going to be. If the crude oil is raising at a elevated level and it's going to be a prolonged period of time, then the implications are definitely, it's going to create pressure on the economy, it's going to create pressure on the current account deficit and inflation, which is cooling off and which has given a comfortable zone and comfort to the policymakers, especially the Monetary Policy Committee, RBI Monetary Policy Committee is concerned. That creates some kind of a uncomfortable situation for everyone. So by and large, we need to closely observe how the developments that are going to take place in the coming days. The same kind of situation we faced when there is a escalation, geopolitical escalation erupted between Israel and Iran a couple of quarters back, and also when the beginning of the geopolitical issues between Ukraine and Russia, the market also behaved in a similar way. But this time the narrative is completely different. The Middle East is completely tensed. There's a chaos around the Middle East that's creating more pressure on crude oil at this point of time. But we need to closely observe. By and large, if these tensions are de-escalating, then we can see the crude again taking a U-turn from the current levels. But we need to closely observe. By and large, the crude is in a downtrend historically. India is the one of the key economy that has taken the advantage of the downtrend in the crude oil. There is a plenty of crude oil is available, but due to the current the shipping networks and also the closure of Persian Gulf, the Hormuz Strait is concerned, that is a key concern. The news report says there are around 700 shipping liners got stuck up in this zone. So that's going to have some kind of an impact on the near term, the supply concerns for crude oil. Closely observe the things, and one need to take a call how crude oil is going to behave. There is plenty of oil right now. US is the second largest exporter of oil is concerned, crude oil is concerned, and with the addition of the recent Venezuelan oil, the President Trump administration is speaking, there is plenty of oil is available in the long term. But closely observe the developments in the Middle East. That is extremely crucial going ahead.
Got it, Kranthi. Kranthi, now that you're mentioning that, this time it's going to be different compared to what it was for Russia, Ukraine. I mean, does this mean that the rate cuts from the RBI front would also be off the table? Because now we have brokerages who are also estimated, before even the crisis started, they were estimating to see inflation rise above that 4% tolerance band of RBI in FY27. So what does this mean in terms of RBI's rate cut and, of course, the policy path ahead?
Right now, for next couple of monetary policies are concerned, RBI might be more vigilant. They might be in a wait and watch mode at this point of time. But by and large, the RBI prime objective is giving a headroom for the growth. That is the prime objective of this monetary committee. That's where they have done the decisions previously in the earlier monetary policies are concerned. So we need to wait and watch. This is very premature to say the crude oil prices are going to go up above $100 per barrel. We need to closely observe the things that are going to take place. Everybody cross the fingers. If the crude oil is going to go up, it's going to hit the US economy also on a other side. So everybody crossed their fingers to how the things are going to pan out in the next coming couple of weeks. That is extremely crucial. But by and large, right now, we need to agree that the crude oil is spiking up, and it is expected to go up if the things remain the same, and if the escalations are going up, definitely crude oil is expected to go up in the medium to short term. But how the timing, that is extremely crucial, whether it is a short term spike or it's going to be a prolonged rise in the crude oil prices, that is extremely crucial going ahead. And it's going to influence the decisions of MPC is concerned.
Okay, got it. Kranthi, I mean, we've already seen that Nifty has fallen by about 1,000 points or even 4% given how the West Asia crisis has been unfolding. I mean, going ahead, what is the quantum of fall that you're anticipating in the upcoming days? Or do you think that we can be contained from here on?
One thing is nobody knows the exact bottom. If the crises are going up, if the escalation of Middle East tensions are going up, it's going to have a significant impact on the markets from here onwards also. When the Ukraine and Russian war started 5 years back, the Nifty also responded in the same way. And as the things that are progressed over a period of time, markets ignored the Ukraine and Russian war, and still the war is on. It's been 5 years. The war has started between Ukraine and Russia, but the Middle East is different. These are the shipping lines. We have a strong trade between the Middle East nations, the GCC nations, and India is concerned. And 60% of the crude passes and trade passes through this route. So that's where the key concerning area for everyone at this point of time. If the rising escalations we can persist in the coming days, we can see some significant drawdowns on the market in the medium to short term. But any kind of relief, any kind of negotiations that starts to make the peace in the Middle East, that's going to give a very positive signal for the Indian economy and the markets.
Got it. Kranthi, I mean, we've seen that FIs, they have opened this month with largely daily pullouts in the last, that we've seen in the last 4 months. I mean, just when we were celebrating the fact that they've become the net buyers in the month of February, we now have a stronger dollar, and then global bond deals have also come up to a 4.06 mark. So, I mean, what does this mean in terms of FI trends in the near term?
FI is also closely observing the impact of crude oil on Indian economy. And it's going to have impact on the company earnings also if the persistent high crude oil, elevated crude oil prices persist. But in the month of Feb, FIs have been selective buyers and they bought around a tune of around 22,000 net buying is concerned in the month of Feb. But right now, there is a risk of the trade at this point of time. So the crude is the key at this point of time. If the current correction in the market gives some comfort to the foreign portfolio investors due to the significant correction in the market, definitely FIs still look into the Indian markets on a medium to longer term is concerned. So right now the correction offers good entry level for the foreign portfolio investors for a longer term investing is concerned. So how the things are that are going to play in the next couple of weeks, that is going to be the extremely crucial for Indian markets going ahead.
Okay, got it. Kranthi, I mean, the hot topic has been the oil and gas stocks. I mean, we have seen Petronet LNG seeing a sharp fall and other city gas distributors also taking a hit because of the rise in natural gas prices. We did see an interesting note that came in by Citi, which said that Qatar's LNG halt raises a near-term risk for the entire value chain, given that it supplies 40 to 50% of India's LNG. And that makes replacement quite difficult. Now, today, even after government reassuring that we have available stockpiles, what does this entire thing mean for the India security needs going ahead?
Yeah, it is going to be a major concern because market never likes the uncertainty, even though we have sufficient stocks for the medium to short term. But despite of this closure of these shipping lines and the bottlenecks for the supply chains are concerned, as long as these things are not resolved in the medium to short term, definitely it's going to have impact on the supplies, and we can see if the prices are rising for the LNG and the gas is concerned, that's going to have impact on all these downstream companies are concerned. The refineries are somewhere they are in a better place at this point of time. The upstream companies are at a better place at this point of time. Whereas the OMCs, the oil marketing companies and the distribution companies are concerned, they're going to have some kind of a margin pressure in the medium to short term.
Okay, all right. Margin pressure is something that we can anticipate. But Kranthi, not just that, we've seen L&T shares also dropping by about 11% in the last 2 days. But CLSA today, they have issued a positive note saying that because they're seeing this West Asia weakness as a buying opportunity into this capital goods major. So how much does the Hormuz Strait closure impact the business? And do you think that investors should also view this decline as an attractive opportunity?
I completely have a consensus view with respect to the L&T research note is concerned. So this gives good opportunity for the investors, but one need to have a staggered approach getting into the stocks at this point of time. Even the case with the L&T is concerned. We don't, even though the news of Middle East has been the concerning area, we don't have any specific news with respect to disruption of their projects are concerned. So there are yet to know, we need to know about the execution challenges. If there are significant execution challenges, that's where the key concerns will arise. But by and large, it is a sentimental impact on the stock. Given the kind of the capex story and the embedded value for the L&T is concerned, one can use this downtrend as a buying opportunity, and one can accumulate in a staggered manner.
Okay, got it. Kranthi, if we had to choose in this sell-off, what do you think are the safest bets in the market that the investors can look at?
Lovisha, interesting, but by and large, defense looks very attractive to me. The defense sector, the stocks got corrected nearly 30 to 40% from its peaks, and going ahead, the defense spends are expected to go up, and the healthcare. This sector looks very interesting to me. They are much insulated because from any of these kind of oil shocks or any kind of external shocks are concerned. So the healthcare sector looks very interesting to me at this point of time. And also the capex and infra story remains one of the key sectors at this point of time. One can accumulate these sectors in a very staggered manner at this point of time.
Okay, got it. Kranthi, just, I'll just add one more point. I mean, we've seen that the sugar stocks, they have seen quite a bit of a sweet rally today. I mean, there are reports which indicate that the rally has come in because now people believe that there will be more focused efforts into ethanol production at this point of time, given that the crude oil prices have already been surging at $80 per barrel. I mean, do you think that this narrative still stands strong for the sugar counters? And of course, going ahead, do you think that this trend is sustainable?
Lovisha, as long as the crude is going to be at an elevated level, these companies have done capex in the past 2 to 3 years. They have increased their blending capacities, and also the ethanol production is concerned. They have adequate capacities at this point of time. And given the kind of the recent government notification with a blending of 20% of ethanol in the oil is concerned, that can be a favorable time for all these sugar companies which have the distilleries and also the ethanol production and grain production is concerned. So that's the reason we can see the spike in the energy alternatives, the sugar distilleries are concerned, and the companies are concerned, and biorefineries are concerned, and we can see some kind of a buying interest is emerging in the medium to short term. Definitely, the narrative is going to play well if the sugar prices, if the oil prices are at elevated levels in the medium to long term. One can look, and also the EV theme, which is we have been the EV adoption has been taking time. If the oil prices are going to be at elevated levels for longer time, the EV adoption theme also which went to the back burner, and right now that can also come into the limelight again.
Okay, got it. Kranthi, just one last question before I let you go. Of course, we've seen a bit of a buying interest that came in for IT stocks today, stronger dollar, which is why we've seen that the tech stocks have once again rejoiced. But yes, it's ended marginally in the green. But I'll still say that it was a good session for the IT sector, given the sharp fall it has seen in the month of February. So, I mean, going from here on, do you think that the AI scare which the IT sector was grappling with is somehow subsided, given how the geopolitical tensions have come into the forefront, and from here on, the worst is already baked in into the price?
The last few days, the AI was not the headline. The headline was captured because of the what's happening in the Middle East and Iran tension is concerned. So some kind of buying interest is coming with respect to the IT stocks are concerned. We still vary how the entire story of AI is going to take place. So in the medium to short term, despite of the compelling valuations for the Indian IT companies are concerned, we are still trying to be in sideways with respect to IT index is concerned at this point of time, given the kind of uncertainty in the market and also uncertainty in the IT space is concerned. So we tend to be on sidelines with respect to IT is concerned in the medium to short term.
Okay, all right. You remain on the sidelines for the time being. All right, Kranthi, with that, we have to let you go, but thank you so much for joining us.
Thank you, Lovisha. It's always my pleasure to share my views with you and with all the viewers of Moneycontrol.
Thank you. Thank you so much. All right, that's all we have for this edition of Closing Bell. Markets clearly down for the third consecutive day. And of course, the advanced decline ratio, that stood at 1:5. And we'll watch out whether or not the markets have enough fuel to digest all the geopolitical news developments that we have been getting. But yes, before we end the show, do listen into Probal Sen, who is the energy analyst at ICICI Securities, talking about whether India's energy requirements are sufficient enough to navigate the current geopolitical crisis. Do listen in.
30% of supplies have been basically curtailed by Petronet to the off-takers. So which obviously then spills over to the ultimate gas consumers. So you are seeing supply cuts, as the other gentleman was just mentioning, that in the industrial sector, there are already supply curtailments that are happening. Because even though in LNG, there are alternates available to a certain extent. I mean, yes, 20% of capacity going offline is not something that can be mitigated completely. But, with supplies coming in from the US, with Russia having a lot of idle capacity, which is what I was mentioning earlier, that, there could be some practical realities where Russia could get some of its energy exports back into the market and India would stand to benefit. But in the near term, obviously, if your 10, 15, 20% of supplies are actually curtailed, then it is obviously going to create supply shortages or at least supply cuts to a certain extent. And homes and CNG will remain priority, but industrial users, even commercial users, all of them can actually see some curtailments and some cutbacks.